What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SPY for the ETF of the S&P 500. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will of course be an update. We talk about this marketplace regularly here on this channel as well as the main channel in much more detail. A couple of things that I need to point out here. First one is that we did resolve this 5 or 4 day balance, depending on how you classified it, to the upside, right? We broke that level and ran throughout the course of the day up into this all-important area. Now that brings me to the next major portion of today's video, the fact that 450 backtest is so pivotal. Call it 450 up to 451, depending on how you want to split these lows from in here. If we are to recapture that, more bullish than bearish inside of the S&P. This to me would just be an overblown sort of correction, if you will, and an immediate reversal back into bull market territory. The flip side of this coin, and the thing we really need to be mindful of, is the fact that if we roll over here, it's nothing more than a lower high, keeping this downtrend intact, and maybe we make a revisit to some of these lows. Now, we're going to know the technical areas when that becomes in play, right? First of all, we'll probably get something like an inverted hammer up here, and then we take out the lows, and then here's the real signal, right? Falling back down underneath the top end of this daily area of balance at 443.50. If that's the case, then this to me starts to become a look above and fail back into the range, and the target, as we know, should be the bottom end of the range here at 428.50. That would be how I would play the SPY into the remainder of the week. So this area, oh so important. Do we smash right through it? Fine, be more bullish than bearish in the S&P 500. If we roll over here, start to be careful. We know that 443.50 is the line in the sand, and if we start going sideways, I would start thinking about that as value building higher outside of this area and really failing to fall back down underneath. So those are my takes inside of the S&P 500. Let's take a quick look at the 30-minute time frame just to see how the moves unfolded here. Very strong out of the gates, right? And even getting sideways price acceptance higher, building the case for more value to be established up here, more time spent, more volume transacting away from this area down below, right? So again, it's building the narrative that yes, this is beginning to become more of a bullish move here in the S&P 500 that could change the tone of the daily time frame downtrend. Again, don't forget, and let's just draw this in so we don't forget it here ourselves. This is the area, right? That's officially going to change the trend if that breaks and we get a new higher high up and over the resistance trend line. So be mindful of that. In terms of Fibonacci pullback areas, in terms of what's healthy, let's see what we've got here coming in from the low of, where's 930 bar? There we go. Up to the high. There we go. Basically, our consolidation into the afternoon at 446.34. Honestly, I would just start thinking about the 61.8 and the top end of the daily range acting as that line in the sand. So to me, fine, bull flag consolidation in here, building the case for something like that. Then we get the breakout. If we fall back down underneath, you know the drill, probably coming back down closer to this area, 428.50. So one step at a time, but it does look to be a little bit more positive here in the S&P 500s as opposed to negative. That's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.